All right, Facebook. It has been a while, so it's good to be back. This time of year, always very busy for us, so we always end up with a lot of going on. This time of year, people, I think, come in and go, right, I want to look at my health, I want to look at my wealth, and as a result, we're busy. We've had a live kickstart running for the last few weeks as well. So I will do a market commentary. I'll probably do this tomorrow, especially as we've seen a bit of a sell-off on the S&P, and we see exactly the same here on the Dow. So we're at some interesting and key levels. So I will touch on that. But today it's a little bit of a different one because we've been talking a lot in the trading room, especially with the new recruits that I've had come in there. And this week is week 4 of our Kickstart where we talk about mindset. But rather than just talk about mindset from a static point of view, what I want to talk about is a recent live trade that I was in. So I want to show you the trade. I want to show you the actual trade. You can see it here. Okay, here's the trade, here's the stop loss, here's the profit. All right. Now the reason I'm bringing this in is because it doesn't matter whether you've been trading 20 odd years like me or whether you've been trading 5 years, you will still be affected by losses, by wins, and especially if you adopt some sort of trailing stop process to what you're doing, it can affect you. And often the difference between a bumper month, a bumper trade, a bumper week can actually be a very, very small amount. So you can see the trade here. So we've got a couple of lines on this chart that I want to work through so you can see the trade principle and what exactly happened. So this was a trade, breakout trade that we had on oil early in the month. Price came up and we reached a certain point. Now this strategy has a very specific trailing stop process. So price has to reach a certain point and then you trail your stop up. The initial point is break even and then you trail it up relative to the price movement. It's not a discretionary trailing stop because we've tested it over a long period of time, and that's the clue in today's training. We've tested it over a long period of time, and that is the most optimum way to do it. However, we're in a situation where the trade reaches a certain point and I trail my stop up and my stop goes up to this red line here. So I've trailed my stop up to this point. Now at this point, I've locked in just under 2% on the trade. So I'm guaranteed, regardless of what the price does, I'm guaranteed 2% at this point. So I've locked that in. So a lot of people, and we can have another discussion at some point about trailing stops. A lot of people lock in their stops or trail their stops too aggressively and don't have a system for it. That's a whole other conversation and something that we teach you on our Kickstart program. But here, price comes down. You'll see price come down, reach that point, and then you'll see price comes down and I get stopped out on that trailing stop by 1 point. You'll see price goes below that level, comes up. So the next day I come in and go, oh, I've been nicked out of the trade. I check, nothing has happened with the broker. I check on various different price feeds to check the price did reach that level, and it did. And then what you'll notice is literally the next day price goes up. Price goes up higher, price goes up higher, price goes up higher. And then over the coming days, you'll see price comes up, reaches this point here. And it actually gets to a point where had I not been stopped out by that tiny margin, my stop would have run on. I would have been able to trail my stop up and run it on and locked in 14% instead of 2. So essentially, sorry, not 40%, 16%. So as a result of being stopped out by literally 1, maybe 2 points, I missed out on 16. So I made 2%, but missed out on 16. Now the challenge here is those of you listening that have traded before, you've probably had trades where you've been nicked out and stopped out, and then the trade's gone on to hit target, or you've been nicked out on a trailing stop. The challenge with this is that fine line can feel worse, even though I've banked 2%, because you forget about the 2% and you see what you could have had if you hadn't just been stopped out. So the difference between 2 points on this trade was the best part of 15 odd £1,000 for me personally. So how do you deal with that? How do you reconcile that, regardless of whether it's £15,000, £1,500, or 15 or £150, depending on when you're starting out as a trader? Because the challenge is there are 2 bias mechanisms that you're being affected by when this happens. The first one is recency bias, and the second one is hindsight bias. And those of you that have traded before have probably had a scenario where you've been in a trade The trade comes up, hits the target, you feel relief, and then the trade runs on and you think, oh, I could have had that. Or a scenario like I had where price stops you out, nicks you out of the trade either as a loss or a smaller percentage than what you could have had if it hadn't nicked you out. So how do you deal with this? And it's no good because a lot of people say, well, you still banked 2%, or well, you stuck to your strategy. And all those things are great. But in that moment, your recency bias is looking at what the price action has done here and thinking, oh, if only. And I did at one point go, God, if only I hadn't been stopped out, I would have had 17 grand instead of two. So it's very difficult for you not to think that. It's like saying to somebody, don't think of the color blue, especially when the price action is there in front of you. But you have to realize that you are focused on the result of this one trade rather than a result of multiple trades. And understand that you are affected by the hindsight bias. I see this all the time where traders will turn around and say, well, you should have done this, you should have done that. But you have to remember these two work together, hindsight bias and recency bias. You are very often affected by what you're seeing recently. And on top of that, the risk is as a result of the hindsight, you start to change your strategy or change your approach. An example being, I could sit there and go, well, what I should do is only trail the stop up once the previous high, or if it was a short trade, previous low is broken. So suddenly the result or the annoyance or frustration on missing out on the bigger move means that as a result of hindsight bias, I change my approach because of this one-time trade recency bias. And what I end up doing is I end up going around in circles. So that still begs the question, what do you do? Well, yes, you acknowledge the fact that you still had a 2% win, but what you need is the data. And this is why data is so important. This is what we teach on week 3 of our Kickstart training. Data and having access to the long-term performance of that strategy will help put things into context. So for example, simple mechanism, went back to the data. We have 18 years of live traded and tested data on this strategy. And I just went in and said, based on the trailing stop management that I'm running, let's look at break even and what we call 1-for-1 trades, which is the 2% profit that I had on that trade. Let's see, out of all the trades over that period of time, all of the trades that you can see here, winners and the losers and the break evens, all of those trades with different risk to rewards on the trailing stops, some 7-to-1, some 4-to-1. Go back and say, right, let's look at the break even and the 1-for-1 trades and see how often they happen. But this is the key bit. Look, I can see you regularly get 1-for-1 trades and you regularly get break even trades. But look, this is the key bit. How many of those trades do that? Look, break even and then run on after that and do a 9-for-1. That 1-for-1 did a 3-for-1. That 1-for-1 did a 3-for-1. That 1-for-1 did a 4-for-1. Scroll down, look. That break-even trade stopped you out at break-even and went on and did a 12-to-1. Look, this one here. That 1-for-1 trade went on and did a 10-for-1. So being able to look at the data and go, even though I'm running the optimum trailing stop system for this particular strategy, and over the long haul, you can see the percent return compounded goes up and up against the standard 2-to-1 exit. You can see the difference here. Even though I've got that, the price I pay for that is some individual trades. If I go back up, some individual trades are going to be going against me or feel as though they're going against me, because what's happening is I'm getting a small profit or a break even, and then they're running on for a bigger amount. So as soon as I can look at that and put that one trade into perspective over multiple trades, that immediately helps with the recency bias, and it immediately helps with the shoulda, coulda, woulda that I often see with traders. So remember, you are going to be affected by recency bias and hindsight bias, and there are going to be times where you're affected more or less by that. So the key, the solution to that is make sure you have got access to the data for the strategy that you're trading. If you're trading a strategy without any data, go and get it. Come and learn from us exactly how you do that, because what that will do is that will help create perspective and realize that the trade that you've had, nothing was wrong. Yes, it was a fine line trade, and as a result, you missed out on 15 grand in my case. You had a 2 grand winner, but you could have had a 17. That takes you away from that, looking at that fine line perspective and looking at the fact that you were stopped out by a couple of points and being pissed off with that, it puts everything into perspective and you realize that that is part of the game that you are in when you're running trailing stop systems. And I have a saying which is, even the best or most optimized trailing stop system, even the one that you have done and it is the best, at times will feel like the worst because it will do something like this trade did for me and some of our members at the start of Jan. So make sure you've got the data, because the data helps give you perspective and helps you maintain consistency with the strategy, regardless of whether you have a fine line result or a series of losers. So I hope that was useful. If you're listening to this and you want to find out more about what we do, head to tradersupportclub.com. Just click on any of the Start Right Now buttons and you can get access to our free membership. And I will be back with you again with another video, probably tomorrow, and if not, very, very soon.